Hello everyone, CryptoEat here. I'm sorry guys, I haven't been really able to make new videos on the MTF Wave Stochastic RSI indicator, but I'm back at it, so I'm gonna be posting more and more videos, probably in a more random manner, cause I keep seeing things I want to post and it's just easier to post them, so I'm gonna just post anything I see from now on. So today I'm going to be talking more about MTF Wave Stochastic RSI in terms of or in general for normal traders. I have made a couple of videos that are specifically for elite waves and elite waves confirmation through the MTF. I'm just gonna call it the MTF. Call it MTF from now on because it's shorter. It's the second indicator in case you don't know it. I'm gonna turn this off. So I'm going to be showing you a couple of interesting things you usually see, and I'm going to discuss what meanings they have randomly. So this is Bitcoin, and this was the first bounce followed by this correction, and then this is the latest impulse. Regardless of the elite wave count, just ignore it for a second. So a couple of things that you usually see on any chart of the MTF are the following. First, for example, this is a very common pattern you see, which starts from here and ends there. And this is something I explained in the previous videos. I even called it a full move. And I explained that what I meant by a full move is a move up and a move down as a full move. And I also explained that this usually is an impulse plus correction. So just to highlight it here, this is what I meant with a full move. A full move is when you see the green line, which is the largest time frame stochastic RSI. You see it go from being oversold to overbought, and then go back to being oversold. And this full move usually means that you had a full impulse and then a full correction. When we count this, usually what we see is the following. We see the start, or maybe just disregard the count. A couple of interesting things here I wanted to share is those V bottoms. This is one, and this is another one. Okay, these are very interesting points for scalping. So if you at this stage, if you were already biased that we are now running for some time, these would be good entries. Okay, let me just highlight them. This is what I mean by the V. Okay, so this would mean that at the 4-hour time frame, for example, you would enter at the first confirmation or the first close that this is a V. In this case, for example, you would miss this bounce, but you would still get in it. Let me just zoom in to see if you would have a better signal on lower time frames. Yeah, maybe. When the good thing is, or the thing you must do is you need to keep zooming in and out. So if you're on the 4 hours, what I usually do when we get to this zone here for being overbought, I start looking for an entry. And since usually it's a bit late when this V builds up or prints, in this case it was late. Here it wasn't really late because you'd have just gotten in here and you would have easily played or entered a scalp trade with probably maximum 3% stop loss, and you would have made a decent 15%. Okay, so this one was easily tradable by the 4 hour. This one would require that you zoom in, and even if when you see this being overbought, and then you see the lower time frame, the gray one and the blue one going down. This is usually the correction, and this is where you start looking on lower time frames for an entry. So looking at this entry here, you would see that the normal stochastic went to being oversold, so you could easily enter anywhere here, also with a good and tight I mean stop loss. Okay, or you could have simply waited for it to be oversold, take its time being oversold, and then with the first signal of it starting to go up, you could just start buy it and have your stop loss. So this is usually something I look for when we're in a confirmed uptrend, those V's, those ones. Okay. Another thing that is usually something I look for is, and I'd like to call it a weak move. Okay. When you are looking for shorts, you usually should look for shorts either when this has been overbought for some time. Also, remember guys, you need to be using it with technical analysis, not alone. But when I do this, I do it after some confirmation that we're in a shorting zone. Usually what I look for is when this green stochastic RSI starts going low, and when the lower time frames are overbought, or when they're creating a V top. Okay, but not only a normal V top. Usually a normal V top would do it, but what would give me more confidence is if I would see that the gray one is much stronger than the blue one. Okay, so what I mean here is very simple. If you zoom in, you will see that there is a big difference between the gray one and the blue one. So here, for example, there's a difference of 50, almost half of the RSI. And when that happens, usually there is this is an indication that we're making a weak move, or like a fake out. Okay, but you have to remember that sometimes it can still simply pull the blue one. Okay, so I don't really trade on this alone. I have to use technical analysis with it, because sometimes you see it do this, and then here it stays simply on the 100, and this blue one keeps pulling up. Okay, so when I am suspecting that this is gonna be a fake out like this, and shape this exact shape, this is where I can simply enter a short with a proper stop loss, simply here. Okay, or even the candle before it. So I would simply short somewhere here, and it would be a good short. Okay, like you've seen here. Another one is when you see this, and let's get back to this part, being a full move, which is a wave up plus correction. Usually these are the shorting areas when you are heading down and you are having the normal and the lower time frame stochastic make those V tops. Okay, the second one would be here at this zone here, not only because of it doing that, but because it simply showed us a bearish divergence. This is the bearish divergence I'm referring to. You have this making a higher high, and here it makes a lower high. Okay, so let's continue here. And then after this correction started to become oversold, this is where you would start to zoom in and look for re-entries. A classic way for me to trade this is, from experience, is when I see this being oversold, this is when I start to be interested. I don't jump in at the first oversold sign. Okay, usually it bounces, but the thing is, yeah, if you backtest these green highlights when all the time frames together are oversold, usually it bounces, but it's not an indication of a reversal yet. Okay, what is an indication for a reversal is usually when you have several ones and then you couple it with technical analysis for a reversal, or when you start seeing this being oversold and then it bounces and then it goes down, makes the same low or a lower low, and it diverges here, makes a divergence. So the divergence is on the MTF. When you're looking for a divergence, there are several ways for it. It's either a divergence on one of the three time frames alone, meaning the green one, for example, is diverging here. Okay, it's diverging because you are making the same low or a slightly lower one, and the green one is simply going up. That's a divergence. A second divergence is on the normal stochastic, which is also here, the blue one, but I'm doing it here because it's easier. Okay, when you're diverging like this, and even on the gray one you're diverging. Okay, so you have several divergences on the MTF. So this would have been a clear entry for me to just enter here at the same level with a tight stop loss and just enjoy the profits. Okay, what's happening here is the same that happened before. What should be expected here is same as always. Here you were overbought, and then you had this V, and then you had another red highlight, and then you're gonna start doing the same what you have been doing here, unless this is the fifth wave, like in this TA for example. Then you're just gonna see one or two maximum, and then it's gonna go down. When you go to the higher time frames, let's just go to the 12-hour for example, this still looks like the same move, but it's diverging. Here you can't see much. On the 1 hour, this is how I read normally the MTF on several time frames. What I see here is on the daily, I see the green one diverging slightly or losing a bit of strength. The gray one is starting to round down, and the blue one is still heading upwards. So this is still a bit bullish, not bearish yet. Remember that the confirmations come a bit lagged. Okay, on the 1 hour, still don't see much. This is another classic example here of a weak move, okay, or a fake out. This one, like the one I mentioned earlier, this one, you see the gray lower time frame stochastic simply flies alone without pulling the blue one significantly. Same here, about 50 difference. This is the number I look for. Okay, this would have been a good short scalp, but again guys, you need to always have your risk management because it's not a rule. And usually these are very short term scalps, so when I do this, I simply close it whenever they meet each other all again. Okay, when this V is finished. Okay, what else? This is one of the examples why I tell you not to count on this alone, because for example here what you see is a big difference between the gray and the blue. Okay, so here it's easy to get deceived by it. See, this is a big difference, but then it continues to stay up until it pulls the blue one. So when you see it staying up, know that it's gonna sooner or later pull it up, and then you're gonna have a strong move upwards. Like here, this is the beginning of a move upwards, and then when you look at this time frame, for example, you keep seeing the same patterns we discussed. This is a full move, okay, like wave 1. And then when you see this, you usually need to zoom out to understand what's happening, because this is just grinding or moving slowly, where it's hard to read when you see this. This is a classic one again. It just stayed up until it went down. So what you see from this one is that this move here, which started there, it kind of finished here, and this might be like the last leg up, okay, unless this stays up. This stays up, the green one I mean stays up, like what you're seeing on the 4 hour here. And again, this on the 8 hour is an entry. Why? Simply because you had the gray one lose a lot of strength and the blue one not falling down as fast. So this would mean you should check for an entry on the lower time frames. And when you see that with this kind of candle, usually you can expect a big one afterwards. Okay, anyway guys, this is a part. I'm gonna make the video separate so people can have it in an easier way. And I'm just gonna keep posting random thoughts and ideas about the multi-time frame stochastic RSI. Sorry, the multi-time frame wave stochastic RSI indicator. And again, guys, for those who don't know this and just stumbled upon this video from a different source other than Discord, this is my private indicator. I'm selling it for $30 for non-Discord members. Premium Discord members get it at a 50% discount. I'm gonna post the links in the subscription in case you are not familiar with how you're going to purchase it. Okay, anyway, have a nice day. Bye bye.